Matthew Bell here, and today I wanted to talk a little bit about long-term care. The term long-term care is ambiguous. It can actually refer to either skilled nursing care or custodial care, and I'll just briefly suggest the context in which you might hear one or the other of those two. The reason it's ambiguous is because long-term care intuitively refers to whatever care a person may need over a long period of time. If a person is suffering from a chronic medical condition, then that person may need skilled nursing care or medical doctor attention over a long period of time. Therefore, from that standpoint, loosely speaking, the person may need long-term care in the sense that he or she needs medical care for a long period of time. But in industries like the insurance industry and in billing for various nursing homes and other facilities, there is a distinction between skilled services and what are called custodial services. Now, custodial services are those services that a person would need if he or she is unable to perform one of 6 activities of daily living. Now, the activities of daily living, or ADLs, are just what they sound like. They are essential activities that you and I do, able-bodied individuals do, every single day, often without thinking about what they're doing. So, for example, we're talking about bathing yourself, taking care of your hygiene, dressing yourself, being able to feed yourself, being able to transfer in and out of bed, being able to toilet by yourself, and being able to control, number 6, your bodily functions, and in other words, to remain continent is the word. Now, if a person lacks 2 out of 6 of these activities of daily living, that is to say, if a doctor has certified that they're no longer able to dress themselves or toilet by themselves, or if they are incontinent and they can no longer feed themselves, any combination of these two would qualify a person to be long-term care eligible. That person would be considered certified long-term care needy. That's from a physical standpoint. Another aspect of long-term care certification in this custodial sense is cognitive impairment. If a person is cognitively impaired to such an extent that he or she requires constant supervision in order to not be a danger to themselves or to others, then that person would also be considered long-term care certified. Now, what we have in mind for this sort of presentation is essentially going to be those custodial services. And those custodial services are not covered by medical insurance, they're not covered by healthcare insurance, they're not covered by Medicare. Now, what's the probability that an individual is going to require that kind of care? Statistics vary quite broadly on this. I've seen estimates that range from 30% on the low end all the way up to 70% on the higher end. If we just take the median of those two figures, 30 and 70, you get a 50%. 50% in terms of the middle of the road guesstimate in terms of whether or not a person over the age of 65 is going to require some kind of long-term care in his or her life. Now, for many individuals, by the time they get to that level, they have some chronic or terminal disease, and they don't last long, for example, in a care facility. But the majority of long-term care recipients, long-term care certified individuals, are receiving care from family members or close relatives. Statistics are extraordinarily difficult to get. For one thing, not all cases are necessarily recorded. Certain individuals may not be brought to the attention of healthcare providers in the way that one would like in order to build statistics that would be reliable. And even in a nursing home environment, individuals may still have family or friends that play an active role in their care. My father, Jim, passed of Alzheimer's dementia in 2016, and when I visited him in the nursing home, I met other families who were playing active roles, more active than I played, in the care of their loved one, even in the nursing home environment. Now, the toll on caregivers can be quite hefty, and it applies to several different categories. The first can be emotional. There can be an emotional toll. In many cases, a person who is, for example, cognitively impaired can become, as my dad did, aggressive. They can become depressed. And this kind of an environment, if a person is caring for him or her in a home, can be very suffocating. It can be very isolating. Another aspect is physical. It is no easy task to pick a person up and get them from bed into the bathroom, or to get them from the bathroom back into the chair, or to be able to cook meals for a person and feed them, to be able to bathe an older adult. In many cases, people draw analogies with childcare. And to be sure, there are a number of different points of contact, but it is quite a different thing to bathe an older adult than it is to bathe a child. It's quite a different thing to be able to feed a small baby and to feed an adult. And in many cases, what one runs into, as I did with my own dad, was that some of the things that you're required to do, the person may resist you in various ways that a baby would not be able to do because of the size differential. So when you're dealing with an older adult, things can be very difficult, even more so than when dealing with a young child, because the challenges are different. There can be physical injury in lifting a person off of the ground, for example, if they have fallen, or lifting them out of bed. It can be physical injury to the caretaker, and that kind of thing is generally not the case when lifting a small infant. Caring for an older adult can even reduce the life expectancy of the primary caretaker. Now, this often happens in a context where there's a husband and a wife, and one or the other requires care, and the other one becomes the primary caretaker. There are some statistics that suggest that the life expectancy of the caretaker is going to be meaningfully reduced. One of the most measurable areas of impact is going to be monetary. For the person who has to assume caretaking roles, if it's a son or daughter, there may be lost time at work, there may be lost productivity, person may lose income and assets. And this sort of thing is going to, again, since it is long-term care, it can impact people for a long period of time. So let's just talk about these for a minute, the threat to assets and income. And what I want you to keep in mind is that even if you have a nest egg that you have reserved for retirement, even apart from long-term care, there are any number of different risks that are presented and that can pose a threat to that nest egg. There's the risk of cost of living increases and inflation. There's a rising cost of health care. So for skilled nursing, and as you age, it is more likely that you're going to have different medical conditions requiring some of that care. Those pressures are independent of this conversation of long-term care. And when you take them together, they can pose a significant strain on a person's retirement. If you have a couple, a married couple, for instance, then the retirement assets presumably are not in place simply to support the retirement of one individual, but are in place to support their joint retirement. If the assets have to be depleted, as they were for my parents, then my mom, who has survived my dad after he passed, is in a much worse position since her assets had to be spent down in order to qualify my dad for Medicaid. Her assets are in a worse position than they would have been otherwise. For many Americans, unfortunately, who are in retirement or about to go into retirement, some of those resources can be fairly meager, even going in apart from concerns about long-term care. Now, if a person turns to their son or daughter or grandkids or some other relative, you have to understand that you might also be putting a pressure on their own retirement plans. So the average age of a caretaker can, again, range as widely as the percentages that we were talking about just a moment ago, but I've seen statistics that caregivers can range anywhere from 45 all the way up to 65 or higher years of age. Well, if we're talking about a caretaker who is in his or her 40s, then that person is almost certainly in very critical working years in terms of trying to develop their own retirement nest egg. If that son or daughter has to take lost productivity at work in order to care for an aging parent, the aging parent may be benefited from a monetary standpoint, since that aging parent may not have to touch assets, they may not have assets, and the son or daughter therefore provides care, enabling that older adult to receive care without having to go through a Medicaid application process. But that care and the lost productivity time for the son or daughter may put additional family members in jeopardy down the road. It's not to say that family members cannot be an important and viable part of your own long-term care plan, but it is to say that one needs to be extraordinarily careful before simply assuming that my kids will take care of me and everything is going to be okay, because you could be laying upon them a burden that you really don't want to lay upon them. Costs are tremendous. even for home care. So if you're receiving care at home, presumably you have a relative, possibly a spouse, a son or daughter, who is delivering that care in your home environment. But if you require somebody to come into that home, for example, a nurse, then the average cost of care is $21 an hour, and that's as of this writing in November of 2019. So $21 an hour equates to approximately $43,000 over the course of a year. An assisted living facility is not much more than that on the low end. An assisted living facility could run $4,000 or $5,000 a month, which of course would bring you to $48,000 or $60,000, and these are just national averages. Now, assisted living facilities, and I'll get into it in more detail in another place, but assisted living facilities can provide some help and support for certain things like meal preparation, certain mobility problems, maybe some help administering some medications, but assisted living facilities are not nursing homes. They are not equipped to deliver 24-hour-a-day medical care. They are not equipped to deal with people who are at risk of what they call elopement, that is to say, wandering or leaving the premises. So there are a number of conditions like Alzheimer's and other forms of dementia that might afflict a person and make them an unsuitable candidate for an assisted living facility. And at that point, nursing home would be the only other option besides home care. A nursing home, on average, could cost anywhere from $6,000 to $8,000 a month. In my dad's case, we had to select a facility that was extraordinarily inexpensive as we could find. He had to go through a Medicaid spend-down process, and then Medicaid kicked in. We were unable to find a facility that was our first choice. We were unable to go with our second choice, and we were thinking in terms of proximity to the residence so that my mom could assist my dad and visit him. But we were unable to select their first and second choices because there were no Medicaid beds available. Now, $6,000 to $8,000 is just the beginning point. And by the way, $6,000 a month is $72,000 a year, and $8,000 a month is $96,000 a year. Some care facilities may even be more expensive than that. For example, if memory units are factored in, if there are additional amenities for a place that may have a more elaborate, or if you're looking to get a private room instead of a semi-private room, those costs are going to go up. It can run you over $100,000 a year to pay for care for a single individual in a nursing home facility. Now, all of this is simply to say you need a plan. You need a plan. It doesn't mean that there is an immediate solution to every single family or every single individual's concerns. For some people, it may be a way of allocating assets and putting them off to the side. For other people, it may be putting some assets into some sort of a trust, an irrevocable trust maybe that is set up as a Medicaid trust. For other people, it may be preparing themselves to have to undergo a Medicaid spend-down. A certain subset of people might benefit from exploring the possibility of acquiring a long-term care insurance policy to pay for nursing home costs or home care costs. Other people might look at life insurance in order to sort of build in an indemnification strategy. That is to say, if a person spends a certain amount on their care, for example, in my dad's case, in retrospect, it costs $300,000 over the course of 4 years to pay for his care. If the family had paid $300,000 for my dad's care, and my dad had been insured for $300,000, on his passing, that $300,000 life insurance policy would have paid the family back the amount they spent on his care. So in some cases, a life insurance policy can be used to help offset the costs of long-term care in the long run, or at least to reduce the impact on the family, on survivors, for legacy planning, and other kinds of things. There are many facets to this question. One very important consideration is the fact that long-term care insurance has one of the highest decline rates of any insurance product in the insurance industry. That means that by the time some people apply for it, they are already showing signs of disability or of cognitive impairment, and those kinds of early signs may render them completely uninsurable for that kind of a policy. So one of the morals is it is never too early to start thinking about it. So if you have a relative that is already in need of care, it might be worth having a conversation with a financial planner, with an investment person, with an insurance agent, with some sort of a government official to explore the possibility of state aid. But in addition to that, if you are aware of a situation like that and you look at your own portfolio, as I do now, thinking about my dad's experience, my dad passed at the age of 85 in 2016. He was just shy of his 86th birthday. And when I look at that experience, it prompts me to want to examine my own portfolio, my own plans, and to try to make sure that I have at least some idea of how my long-term care may be provided for in the event that I actually need it. Long-term care risk, in summation, poses an extraordinary risk to your retirement portfolio, to your estate planning, to your legacy planning, to your family, and to your survivors. It poses a risk probably that is greater than some other risks, even substantial risks like the rising cost of healthcare, like inflation. And with the improvements in medical and healthcare that we see in this century that we're in fact, it creates a longevity problem in the sense that the longer a person lives, the more likely it becomes that he or she may need some sort of long-term care at some point in their life. The bottom line is, have that conversation. Have a conversation with your family. Have a conversation with a trusted insurance advisor, somebody who is able to understand your situation, with a financial planner, somebody who is able to take the facts of your circumstance and to talk frankly with you about your goals, about your expectations, about your fears, and try to come to some decisions, even if they're only tentative and preliminary, about how you might address some of these risks, because they are quite significant. If you found something of use in this video, please like it, please subscribe to the channel, hit the notification bell to be alerted to new content as it becomes available. I'll probably take a more in-depth look at various long-term care products available, other strategies for funding long-term care, and if you would like to be a part of that, I would look forward to seeing you in another video. Thank you so much for joining me today, and I wish you all the best in your long-term care planning.